today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
This is Steve Rhodes. Oh, that's for the 1 p.m. update. Welcome to the December 14th. I believe today is the December 14th date. And what I do know, it is the magical Monday edition of today's Trader's Edge show. So welcome to the show, and hope everybody had a great weekend out there. We've got a mixed bag in the markets out here. I would love to hear from you. So the way to do that, you can give us a call at 877-927-6648. And if you can't call in, well, we've got you covered there, too. You can always send me an email, steve@tfnn.com. Inside that subject heading, if you'd be kind enough to put radio show question, and send those emails early, just simply internet service providers and so forth. The earlier you send it, the chances are I'm going to see it on my cell phone, which is really where I'm picking up the emails from out there. And, of course, you can always give us a call. We'd love to hear from you at 877-927-6648 out there. Otherwise, you're just in here listening to the show, and thank you much for doing that. So let's go ahead and get this show started on Magical, Magnificent Monday. Of course, this is Tiger Financial News Network, and again, I'm Steve Rhodes. Welcome to the show. Right now, we got a mixed bag out here. The Dow just turning slightly red, off 10 points. The S&P is flat. NASDAQ 100 up 98. Russell up 13. Semis up 24. New York Stock Exchange down 56. Transports are off 177. Spot volatility still well below, not well below, but it is below its 50-day exponential moving average. Trade out at 24.30, so it's still in the bullish zone target. Gold is testing support, which I believe was 1837. We'll go check that out, but it closed below 1837, and then we'll have to take a look at Stevie's oscillator unchanged line. It's really a close below both of those that would suggest lower price. We'll take a look at that for the silver contract as well. Light sweet crude is flat. Natural gas is up nearly 6 pennies out here. Leading the charge, by the way, dollar-wise. To the upside, you've got Amazon up 49, Alexion Pharmaceuticals up 36, Tesla 26, Arvinas up 27, Regeneron up 21. To the downside, Snowflake $27, 7%. DoorDash off 12% or $20. Google down 18. Spotify off 18 out there. So plenty to look at. And we'll go take a look at the indices out there. But first, we're going to start with a request coming in from John in Sarasota, who wants to take a look at ticker symbol MMEDF, which is Mind Medicine. MindMed out here. It has had a spectacular run over the past 2 weeks, going from about $1 to $5 out there. So you've got nearly a 500% move in just probably just about 2 weeks time period out here. So, I'll put my magic here. There's not a lot of magic that I can put on a runaway chart like this, but let's go take a look at the patterns. Prices above the daily and the weekly profiles. Not enough data for this to generate a monthly profile out there. So, John, it's very bullish, but just looking at any of it, it's also going to be day number 7 of a TD9 count for its daily time frame. If this is going to identify a top out there, that would say doesn't occur for the, possibly tomorrow, be Tuesday, Wednesday, or Thursday where you could see that top and perhaps a pullback, but to where? Look, the numbers on my chart say 285. Am I going to tell you that a $5 stock is going to pull back to 285? Well, it can, but I don't know, John. This is just simply, I think the only way to really trade something like this is to look at these short-term time frames out there, if that's what you're looking for, and to continue with that momentum move. So one of the ways to do that would be to use the oscillator and change line or the TAS market profiles as your momentum type move. So I don't see a topping pattern out there on the daily, if that's what you were asking about. How do you play this? Well, we've already given you that possible way to do that. Look at those short-term time frames. This is a 30-minute chart out here, and this gives you a range between 443 and 470. I'm not saying this will get to 443. It has to close below 470. Now, 470 is the print of the oscillator and change line. Maybe as price pulls back, should it pull back? I don't say that it's going to pull back out here, but if it did, then maybe that changes to 468, 469, something along those lines. But it closed below those levels would get you to 443 out there. That's what I would be looking at. Otherwise, you're in the buy zone, so to speak, right now for MMEDF. So, John, thanks for writing in. Thanks for, I hope that helps you out. It's about the best. Well, I can tell you, it is the best that I can do for you in assisting you with that if you're looking to get in. So thanks again for writing in. Folks, I'd love to hear from you as well. So it's Steve at TFNN.com or, of course, 877-927-6648. So let's go take a look at the short-term time frame charts out here. You've got the Dow off about 2 points, and the S&P is flat. Now, the ES Mini, when it topped this morning, it was with a Rhodes momentum indicator pattern out there. Those are beautiful tops, beautiful bottoms. By the way, the bottom that formed on a 30-minute time frame inside the ES Mini about 6 o'clock in the morning several days ago, well, that was a Rhodes momentum indicator bottom. You'd like to learn this. I'd love for you to learn this. I teach this to you. You just subscribe to Mastering Probability. You know, it's got that 30-day free trial, so that means you've got 29 days of free time to, with really no risk to you, to learn these great patterns, to the extent that you want to become a technical or technician. On the 30-minute time frame chart, is there any kind of bottom pattern that is forming right now at 1:12 in the afternoon? And the answer is absolutely not. That doesn't mean that it can't form a bottom. It just means the bottoms that Stevie looks for here, Rhodes momentum indicator bottom, TD9, seventh wave counts out here, none of those are in play, and we have price below a breakout level. And the breakout level inside the ES Mini for its 30-minute time frame was 36.6975. The next area is 36.3350. Now, I don't know if price will get down there. That's the target area. You're in bar number 6 of a TD9 count. We know that bars number 8, 9, or the bar following 9 can identify a low. Well, if this is bar number 6 going into the 130 time frame, and we need bars 7, 8, 9, or the bar following 9, we have potentially 2 hours. So before a bottom might form, not that it can't, but with regard to that pattern, the TD9 count pattern. So that's saying we wouldn't, the earliest we would see that would be, so if we need two more hours, or 1:30, 3:30. See how good I am at math? You know, maybe between 2:30 and 3:30 is where we would be looking for a potential bottom in the ES Mini. Prices pulled back to its gap from last night. So that can certainly be a buying area out there. But I'd wait for some type of bottoming pattern inside the ES Mini, and we just don't have it as we take a look at it. If we go look at the, which we will, by the way, the 30-minute time frame chart here for the NQ, as we pull this up, what did this top with earlier in the day? Well, we can see the bottom back here, that nice Rhodes momentum indicator bottom. Folks, you want to learn this pattern. Okay, if for those of you that don't, well then, okay, you don't. But here, if we take a look at this, this is we had Basil just on. Here, he likes to talk about that rogue wave. Well, that's letter G. That's number 7, the 7th inning stretch on Stevie's charts. That's all that I really look for out here is that 7th wave move. That is letter G, and it just so happens that that can be where we see markets top or bottom. Does it work all the time? No, but when it's present, it's like, for example, if you're at wave number F, are you going to go ahead and enter into a trade knowing that this might get to wave number 7 and then back off? That's how you would use this. Now, on a 30-minute time frame, the NQ, which is 114 right now, so we've got another 16 minutes. But if price closed below 12,492 out there, that would be below the bottom of a bullish structured profile. And the NQ, which is very strong right now, would be signaling to you and I that it wants to move back further as well. Where could it target? All the way down to 12,270. That's its breakout level. Only bar number 3 of a TD9 count. So not following along as far as the count series with the ES Mini or the NQ or the Russell 2000. The NQ, a mind of its own. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hi folks, this is Tom O'Brien. Do you have broken or unwanted jewelry, diamonds, watches, coins, silverware, and other collectibles that you would like to turn into cash? Tiger Precious Metals and Stones will pay fair market value. We make it easy to turn your precious metals that are sitting around in your house into cash. Call Andy now at 727-329-8245 and he will walk you through our safe and secure process. Andy has been in the business buying and selling precious metals for over 15 years. Call Andy now at 727-329-8245.
TFNN has just launched our Tiger Dollar Holiday Sale. For a limited time, we've doubled all the Tiger Dollar bonuses, where you can now get up to a 20, 30, or even a 40% bonus on your Tiger Dollar purchase. Tiger Dollars are good for all TFNN newsletters, webinars, and services and never expire. Whether you're a current subscriber or just thinking of signing up for any TFNN products in the future, this is a great time to get your Tiger Dollars. Happy holidays from all of us at TFNN.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So one of our generals, I believe, Ruby in the Tiger's Den is short Apple. I seem to see that have gone across my screen maybe 10, 15 minutes ago or so. So we want to help out Ruby to the extent that she is. So if you take a look at Apple, here's a 30-minute time frame, just applying Stevie's tools here. What we can see is this topped at 10 o'clock this morning. And it did on bar number 8 of a TD9 count. That following bar at 10:30 confirmed the 9 count out there. And now price has done what it's supposed to do, which is pull back to test support, Ruby. NQ Steve, I'm using Apple as a gauge. Okay, so either way, here's a 30-minute time frame chart for Apple to use as that gauge. So whenever you get a TD9 count, any kind of a top out there, the only thing that sellers really have are signaling to you is they should be able to push price back to test support. So you've got to figure out, well, where is support? Well, here during this hour, we take a look at our oscillator and change line. That's going to be an area of support. As long as price is above that line, whether it's red or green, the price oscillator is still rising, and that is a bullish or counter trend bullish type move out there. And at this stage here at 119, price is pulled back to test that level. It is held. That level is right at about 122.31. At 122.31, you also have the top of a bullish structured profile. So price must close below that, Ruby, in order to suggest inside of Apple a move back into the 121.79 to 121.97. Now, I'm not dyslexic. I am, but neither event out there, those numbers 79.97 are the TAS market profiles. If price were to close below that, then what you're looking at is a run back to 120.60. But remember, the NQ is the strong dog out here as we speak. Now, in the case of the NQ for its 30-minute time frame, price right now is trading just slightly below its oscillator and change line, but the level that you're watching here, Ruby, to the extent that you would use a 30-minute time frame chart, you'll see a bullish structured profile in 12,492. If you see a close below 12,492 on a 30-minute basis, not at 120 in the afternoon, it must be at 131 in the afternoon, meaning the prior bar out there. Then you've got some move to the downside. Now, on the NQ for the 30-minute time frame, it's 12,270. But as we speak right now, to the extent you're using Apple, watch this area where it's trading in right now for a signal. So I hope that helps you out there. And here's a way to go ahead and be able to use these tools for even instruments, cash instruments like Apple out there on a 30-minute time frame. Now, Michael P. had written in earlier this morning. Michael, I didn't read the full question. I had so many things going on, but I know your question was, I did see the heading, or basically the initial sentence, which is, is the market going to go back to test the March lows out here, the Dow? Let me describe to you what the Dow is doing, or more importantly, what it's not doing. And it's just really just one chart that you and I need to take a look at. It's this chart to understand. Now, the Dow is the bailiwick, so to speak. The Dow is the area where global capital, you've got to think or picture in your mind a big ball of capital that floats around the universe. And as it's floating around the universe, what it's doing, it's looking to park itself where it has the most confidence. With the Dow, the large cap stocks are where you have the largest liquidity. When that global flow of capital is investing in something, it needs to have liquidity. It needs to be able to get in and be able to get out. It can't do that easily in small cap type stocks, but it can in the large cap. And that is why we use the Dow as our proxy out here. It has worked since the beginning of time. There's no reason to think that it's not working here in 2020. And here is what you and I know. In order for a real breakout to occur, and the Dow priced in dollars right now, we can say is a breakout. Why can we say that? It's above prior highs. Now, this is a quarterly time frame chart that we're looking at, but it's above prior highs out there, priced in U.S. dollars only. In order to have a real bull market, you must see price rising in all major currencies. Now, granted, price is rising in those other currencies in the Dow, but what it hasn't done in those other currencies, and those are the yellow arrows at the top of the screen, price has not taken out those prior highs. We do not have a confirmation of a global breakout across the globe. So the question is there a possibility that we could be making a major top inside of the Dow? Well, if you go back to the 2007 timeframe, those would be the green arrows and the red arrows more towards the bottom of my screen out there. When the Dow priced in dollars got above the 2000 high out there, that was a beautiful thing. But price never got above the 2000 high, the Dow priced in euros, or the Dow priced in pounds out there. That was signaling, and that eventually led to the 2007-2009 bear market out there. We have the exact same patterns that are in place right now, Mike. So as long as this pattern remains in play, what we looked at in the past still remains in play. Now, we won't just stop there out here. What we also will do is just bring over this chart for you. And this chart is the annual chart for the Dow. And what's going on in 2020 is unique. We don't get this too often. And that is called, this year, 2020, is going to be bar number 9 of a TD9 count. Now, what you and I know is bar number 9, bar number 8, or the bar following 9 can be the top in a market. So will it be this time? It might not be until 2021, which really means that the so-called major top might not occur until 2022. That's the message out here. I don't know the answer. What we do know is I do believe the probability exists. The probability exists if the Dow closes below the 2019. Let's just say 2020. If the Dow closes below the open as we began the year. Now, this is my historical chart, okay? It's not updated, so it doesn't have today's data or the last several weeks' data out here. That's okay. I just showed that to you. But this, why am I showing this? Because if we do get a key reversal bar, that's why just one tick below the open, then, which is a very, very much a topping signal out there, then, Michael, that says, yeah, we could see the market move back for a couple of years out here. So this is coming back to 1896. You will see we don't often get TD9 counts on an annual basis, but we do have one as we speak right now. Mike, you put that together with the fact that the Dow is not taking out its highs in terms of euros, yen, or pounds out there. Yeah, there's still a problem. And if we take a look at, continue looking at the Dow, let's do this here. Let me see, where are we at right now? So let's try to bring this to a daily time frame. I don't know the answer. I should know the answer. Not that I need to know the answer. We're going to go find out the answer. What answer, Steve-O? We're just taking a look at the Dow here, priced in U.S. dollars, and take a look at this nice little trend line. Now, you can put this trend line. By the way, this is the bottom left panel that we're taking a look at out there. I think Basil was talking about trend lines just as I turned into my system out here. I didn't completely get what he said about trend lines. Not that I didn't get it. Wasn't completely listening. I think he was saying, how does a market know to respond to the trend lines? I didn't hear his answer out there. I wish I did. But here what you can see, whatever his answer is, those of you that were listening, here is an example of watch how the Dow, today its high got up to that trend line. And then it pulled back out there. Now, granted, price is still in the consolidation breakout mode out here inside the Dow, and it's still signaling to us the possibility of a move to 32,190. But if it's going to do that, it's got to take out these resistance levels of its trend lines out here, and it just simply hasn't done that as we speak right now. So, Michael, I hope that helps you out with regard to the Dow and what it is doing and what it hasn't done as we speak right now. Steve Rhodes with TFNN. We've got the Dow. Speaking of the Dow, up 19 points. The S&P at 5.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
Whatever you think about, you bring about. Whatever you focus on grows.
you see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Over from the last conversation I was having there with Michael P. With regard to the Dow. This chart here, it's not really a chart, it's a table, but it allows us to take a look at how the markets have traded since the U.S. election. We can choose whatever time period, but this takes us back to the U.S. election out here. And what we're looking for is to say, or to see, do we see the global flow of capital concentrating itself in any of these areas? Now, these areas that I'm referring to are the Dow, the UK, Australia, Canada, China, India. Then we've got the currencies to take a look at any currency changes. We've got gold. I've got the NDX 100. We've got Germany, Japan. I've got the emerging markets, Brazil, Hong Kong, Mexico. So a pretty good global look at what's going on. And if we look to find out, first to answer the question, do we see a global flow of capital in the U.S.? And the answer is absolutely not. The Dow, since that time period, up about 12% in dollars, 7% in euros, 9% in yen, 8% in pounds. But we can see many other markets out here: Canada, Japan, Brazil, Mexico, Germany. The UK has had larger rates of change, both in dollars as well as their currencies up. But nothing is really breaking out. The only breakout that we see here is Brazil. Brazil has been the winner, chicken dinner. Now, maybe there's others, but with regard to the instruments that we're taking a look at, or the areas in the market that we're taking a look at, and is Brazil where the global flow of capital is moving to? Well, maybe. But it's certainly not the U.S. as we speak at this stage here. And the reason why we want to take a look at this is very likely what we're going to see unfold here over the course of the next year or so, is a major economic recession. So I spent the weekend, or part of the weekend, up in the Orlando area. I think I'd mentioned to you, so I live in Delray Beach. Those of you that have been down here, you know that we've got a fairly famous avenue that we call the Avenue. It's Atlantic Avenue, and it's very much it's a high-end energy place. Several blocks, quite decent number of retail stores and restaurants, and it's kind of a little bit like a South Beach strip. Collins Avenue, only we're not on South Beach. Atlantic Avenue runs all the way to the beach, but really high-end area, lots of cash and money. And I've seen it's amazing how many stores have had to close. Now, it's really not amazing considering everything between restaurants and retail stores. And now what you see are these little pop-up stores that are good, for a month or so or several weeks. Well, I was in Orlando. There's a similar area. So I'd say inside the East Coast of the state of Florida, there's really three real big primary hub spots out there. It's similar to this. In Orlando, it's a city called Winter Park, and they've got Park Avenue. Everybody's got an avenue out here. And on their Park Avenue, even I'd say it has similar number, maybe even more stores, probably more stores than we've got here on Atlantic Avenue. And so I was there over the weekend and took a little time to go over there to see what was going on, and the number of closed stores there too. And this is a high-end area. So in the Orlando area, that's the high-end area of shopping. It's not the those discount malls. I guess they call them discount malls. I don't even remember. But in any event, so many stores that have gone by the wayside. I guess there's four strips. The other area would be up in Palm Beach on Worth Avenue. Now, I've seen a number of stores go out there. I have not been down to South Beach to take a look at it. People tell me, don't go down there. You're just going to get depressed out there, and so I skipped that hour drive. So, Michael, and you must be seeing the same things in your areas as well. But what we can't do is, so we're likely going to see just the worst economic recession that you and I have experienced out here. That's what it seems like to me in crushing these businesses, which is just absolutely insane. And I want to just reach my hands through the screen out there and rip the necks out of those politicians. All of them need to be fired. All of them need to be fired. In any event, beyond that out there, and I'm curious, maybe at 3 o'clock if I'm on with Tom, try to get a feel for what's going on in St. Pete, because that would be another high-end area. You've got Fifth Avenue in Naples. So you're just looking for these little strips. But here's the point. Even if we see the worst economic recession out there, that doesn't mean we're going to see the same thing play out in the stock market, which is why we try to follow the global flow of capital. Because with this global flow of capital, this will help us to understand, because that will just simply, when we do see the global flow of capital, we can throw a lot of our technical tools out the window, because just capital is just simply going to keep moving in there. Whether it's with volume or not volume, doesn't matter. We're not there just yet out there. So, okay, let's move on to the next thing out here. What is the next thing? So the next thing is a request. Was there a request that came in on Thursday? I don't recall if there was. No. Oh, yeah, it was. Canopy growth. Somebody was asking the question. I apologize. I don't recall who. But is canopy growth going to get back to the 23 level out here? So here's what we know about canopy growth. Ticker symbol, by the way, folks, is CGC. And if you've got observations on what you're seeing around your areas, feel free to send them to me. Steve at TFNN. I love to read all that stuff. But with regard to canopy growth specifically, if it's going to get to 23, what we know is price has to close below support. Well, when we take a look at our market profile support, that's at 25.23 out here. Volume on today's move. Now, this is moving into, in essence, this is a breakout area. It's not a TD9 breakout area, but it's a gap to the upside. It had some accelerated volume. I'm referring to the session on November 24th, where there was 12 million shares. Today, it's pulling back into that area and into support with 2.7 million shares. So it's not suggesting to you, now, not that it can't break it, but it doesn't really have the volume at this stage of the game to get below it. But regardless, if you see two close below 25.23 out there, then I would say the answer to your question is, yeah, it'll get back to 23. The question should be, will it get below 23 if that occurs out here? By the way, 2170 is the next support area on the weekly basis. That's the top of its profile. And price right now just hanging below the monthly profile. That's at 25.95. We're trading at 25.65 out there. So let's pull over Stevie's other charts. Take a look at canopy growth. How did this top when price was hitting the top of that daily profile? Very simply, it made a Rhodes momentum indicator top. It was wave number 7, letter G out here. That Rhodes momentum indicator top was confirmed on December 9th with the bearish engulfing candle out there. You can see price holding the 25.23 area, but if price closes below it, you answer the question, where is price likely targeting? Is it 23? And me? No. It's 1818. That would be the number based upon the daily time frame. Is Stevie saying the charts are communicating to you and I that that's where price is headed to? The answer is no. Price is headed to where it got to today, in essence. It could get a little bit lower, retest it, 25.23 out there. What's the weekly time frame chart communicating to you and I? Well, in this case here, you also have a TD9 count top. And inside of CGC, we have not only a TD9 count top, we have the Rhodes, we have the oscillator and change line, Stevie's green-red line, changing colors 4 or 5 weeks ago. You and I know that there's a phenomena associated with that. That phenomena is when it changes colors, tells us about an impending move of that line and price testing each other. Isn't that cool to know? I know many of you are saying, no, why is that so cool, Steve-O? You're not a very cool guy. Okay, I think it's pretty cool just simply to know that. And here is your $23 level. It's 23.14. So the weekly time frame chart is saying unless you see some type of bottom on the daily time frame, you probably should let this move back. Now, that would be the potential of a buy. What do you mean, Steve-O? When that line moves from red to green, first it's telling us that the price oscillator has gotten to 0, and it's above 0. And when price pulls back and tests a price oscillator that's above 0, tests and rejects, and it closes back above that line, that is your bullish signal of the next move. In the case of CGC, that next move should take price up to 41.07. Right now, yeah, I'd be patient on canopy growth. Steve Rhodes with TFNN. We'll be right back.
Hi folks, this is Tom O'Brien. Are you looking to buy or sell gold, silver, platinum, coins, or bullion? We can help. At Tiger Precious Metals and Stones, we specialize in the buying and selling of gold, silver, as well as collectible U.S. and foreign coins. We not only buy your unwanted or broken jewelry, but you can trade that in for gold and silver coins too. Call Indy now at 727-329-8245 for a quote over the phone and to lock in the current market price. Call us now at 727-329-8245.
TFNN has just launched our Tiger Dollar Holiday Sale. For a limited time, we've doubled all the Tiger Dollar bonuses where you can now get up to a 20, 30, or even a 40% bonus on your Tiger Dollar purchase. Tiger Dollars are good for all TFNN newsletters, webinars, and services and never expire. Whether you're a current subscriber or just thinking of signing up for any TFNN products in the future, this is a great time to get your Tiger Dollars. Happy holidays from all of us at TFNN.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 15, S&P 7. Let's go out to California and speak with Bill. Bill, thanks for calling. Thanks for holding, and thanks for calling. How are you today?
I'm good, thanks. And you?
I am very well. Thank you very much for asking. What part of California are you from?
The Bay Area, San Francisco.
Wonderful. How's the weather out there today?
It is absolutely gorgeous. It's 50 degrees and sunny.
Perfect.
And in between rain, so
okay.
since we haven't had any
sunny
rain except for once in pretty much the year, it's kind of nice.
Yeah. Okay, well, good. I like the sunny. I like the no rain. I don't like the 50 degrees. But for you,
well, you got to put up with something.
Yes, you do. So what would you like to look at today?
Well, American Tower, I was involved with it in the middle of the summer when it was on its way up, and it kind of rolled over. And I'm interested in where the TAS profiles stand, and it looks like it's kind of at the end of another TD9 countdown. And I just wanted to hear it from you because I know what I'm...
I love you, and I don't even know you. It's just about to finish a TD9 count. I love it. So let's go take. So first, you asked about the profile levels. So with regard to the profile levels, we've got price below the bottom of its daily and weekly out there. That leaves you and I to go look to support on the monthly time frame, and that monthly time frame support is 213.47. So 213.47 is the only profile level of support that you have. The low that we've seen, and that was on Friday, is 215.41. So price is very close to that area. So knowing that it's close to that area, and what Bill did on his evaluation of American Tower, by the way, folks, that ticker symbol is AMT. As we pull up the daily time frame, what we are going to see is that on Friday's bar qualified as a TD9 count. Now, are you looking to get back into this equity, Bill?
Well, yeah, I kind of buy at the bottom of channels and sell at the top. So based on what time frame I'm interested in. So, it's down. It looks like it's getting down near some level that I might be interested. I need to wait for some kind of buy signal on your basis and kind of know where it is on the red line, green line issue.
There you go. So that's a great segue into what is it that so you've got the TD9 count. It looks like you're going to get that confirmation today. What we also know is that the intra-session high today was a test of the oscillator and change line, that red line that you're referring to.
Yeah, I see that.
And that's at the 222.30. That's a bearish message. So what we really have is a neutral signal, in my opinion, because we've got a valid TD9 count. Now, what you and I know is that low can take place if this is going to identify a low, bars 8, 9, or the bar following 9. Now, the mere fact that price tested and rejected that oscillator and change line sets up a higher probability that we will see a lower low, not necessarily today, but tomorrow. And so I would hold off on entering. What I would really do is wait for price to close above that oscillator and change line at 222.28 right now. But let's go see the larger time frame charts if that makes sense. That's what the daily time frame chart would say to me. Wait for confirmation, and that would be a close above the oscillator and change line. On the weekly time frame, yes, price is below the profile levels. That takes us back to where did price break out from on a weekly time frame. That's 211.03. We don't have any kind of a bottoming signal on the weekly time frame out there. So at this stage, based on the daily, is saying, hey, hold off here, at least for a couple of days. The weekly is saying, yeah, price might pull back to that 211.93 area. The problem is that when we take a look at American Tower, when this topped with a Rhodes momentum indicator signal, wave number 7 out there, and this may be setting up an A to B equals CD to the downside, Bill, that'll take price all the way back to 174.27. That's its March low out there.
That's the kind of thing I was interested in. And I'm probably going to wait for some kind of a candlestick buy type signal also.
Yes. So here's how I would summarize it. As long as American Tower doesn't close above the oscillator and change line, currently in the 222 area, with a valid TD9 count, that's going to suggest that price will head lower. If price closes above those levels, it's either a bottom that is formed, or at least a nice counter trend rally that could take price up into the 250, 255-ish area fairly easily. But we don't have that signal just yet, but that is a possibility if that pattern doesn't unfold. Or better yet, the valid TD9 count doesn't even create a hiccup. Price never closes above the oscillator and change line. In fact, takes out the low of that pattern. That then gets us back into that monthly time frame chart that says, you know what, you should really be cautious on this and wait. The confirmation, by the way, of that monthly move all the way down there, Bill, is going to have to be a close below the bottom of that daily or monthly profile, where in essence we began our segment together, and that's at 213.47. So I think 213.47 to the downside is a real key level, and 222 to the upside is your key level up there. And that's the range right now to be watching. Okay?
Okay, I appreciate it. Love your analysis, and I'm glad to be able to talk to you.
Well, I hope you'll do it more often than that. We love to hear from our friends out in California, for sure. It is near and dear to my heart. I especially love Sausalito area out there, and in just all of California. I mean, what a beautiful state.
Well, we love it. I know there's some great places around the world and in the U.S., but we love it out here.
Absolutely. Hey, Bill, thanks so much for calling in. We'll look forward to speaking to you again soon. And best
Thank you. Really appreciate it. Bye now.
My pleasure. That was Bill in San Francisco. So as we take a look at the markets out here, you got the Dow down about 13, S&P 3 points out there. I don't recall if we looked at this chart. We might have done it during that 1 o'clock segment. So let me pull it back up. If I'm redoing something, my apology. But these are the levels here on an intraday basis that really I want you to be watching. In fact, I think we might have gotten a request to look at. Yeah, we did. So before I do that, this is sent in from another Bill. And Bill says, what support do you have for the ES intraday, and can you see a bounce out there? So we're really talking about the ES mini, but what I want to do first is just pull over this chart. So I wanted to first understand the question that Bill was asking. And so here, I'm just showing the TD9 breakout and breakdown levels for the 30-minute time frame, the intraday, in essence, the intraday time frame, or perhaps the intraday time frame that Bill is asking for. With price below 36.69.75, we'll go look at the other charts out there. This could see the ES mini pulling back to 36.33.50. Now, this chart here, Bill, is not going to identify whether there's a bottom or not. I just want to see where price is trading. Also give each of you the key levels. Inside the NQ, by the way, that level would be 12.270.25. That's the price level. The NQ would have to close below 2 bars in a row on a 30-minute basis to suggest a change in trend, such as the Dow has done at 3,100 and breaking through 30.059. So the Dow could be Dow equity future contract heading back to 29.813 and 19.0510 for the Russell 2000. When we come back from this break, we're going to further answer Mr. Bill's question. Could we see a bounce coming? We'll be right back.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we're taking a look at the short-term time frame charts here for Bill. The question specifically is, could we see some kind of a bounce out? Or no? Here are the 30-minute time frame charts. You can see the ES Mini topped with a Rhodes Momentum Indicator signal, as did the Dow. The Russell 2000, I don't have it drawn in here. This topped with an A to B equals CD to the upside. But to answer his question, the reason why I pulled this chart up here is because if there is going to be a bounce, so there, with regard to the ES Mini, there's no pattern that is formed to identify a bounce. There's no TD9 count, although this will be bar number 7 coming in the 2 o'clock time frame. Remember, bar number 7 doesn't identify a bottom out here. It would be bars 8, 9, the bar following 9. So it says between 2 and 3 o'clock, 2 and 3:30 is when you could see that. So you'd be watching if you got that pattern. The ES Mini, Bill, could take its cue from the NQ. And what the NQ hasn't done is it has not broken down below a key level of support. That key level of support, we talked about this with Ruby when we looked at Apple, is the bottom of that bullish structured profile. These profiles help us immensely out there. Was there a close below it as we came into 130? Yeah, just a slight close. But remember, you always have to have 2 bars. So you don't always have to. I'm just suggesting that based on my experience and reviewing literally hundreds of thousands of these profiles, that's such an important signal to understand where the buyers are lined up. And here with a bullish structured profile, what we're seeing is that bottom was rejected. Now the NQ is going to run up very likely to test the resistance here of 12,549. The point I wanted to make to Bill was the fact that, you could see a bounce and it would be the NQ that pulls all of the boats higher, so to speak, out there. So no bottoming signal inside the ES. I'd be watching the NQ as well, was really what I wanted to get to. So, folks, I didn't get a chance to answer one question, which was about the Dow, I believe S&P for the next couple of weeks because of a Martin Armstrong panic cycle on December 18th. Out there. We'll take a look at that tomorrow. But a panic cycle date means price can exceed the prior day's high, the prior day's low, both of them. It can move higher in one direction or lower in one direction. It covers basically about everything. So we really have to see what patterns are going on at that stage. But we can look at that tomorrow. Folks, stay tuned for 2 more great hours and have a magical Monday.